It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. My name is Sonia Kelly, and I lead Women's World Banking's proprietary research division. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer. Indeed. Welcome and thank you so much for tuning in to the Making Finance Work for Women podcast, streaming on YouTube and available wherever you get your podcasts. If you're listening on YouTube, you'll be able to find additional insights and resources linked in the description of the video below. I'm the host of the show, Sonia Kelly, and I'm also the global head of the Women's World Banking Institute. Now, before we get started, I'd like to give a special shout out to the sponsor of the Making Finance Work for Women podcast, Ernst & Young LLP. EY is a global leader working across assurance, consulting, law, strategy, tax, and transactions. EY teams ask better questions to find new answers for the complex issues facing our world today. You can visit ey.com to explore their latest insights and services. And now let's jump into the show. The title of this episode is As Aid Fades, Can Private Capital Carry the Climate Fight? This is a really, really important issue in the world. It's something that's talked about a lot in the news, given the closure of USAID and others. And we're talking about private capital as a prospective solution to that. Now, let me start with a snapshot of the global landscape of aid, just for a little bit of context. In 2024, Official Development Assistance, also known as ODA, experienced a notable decline. It fell by about 7%. Now, this reduction in aid felt significant, and it underscored the urgent need for innovative, sustainable approaches to women's economic empowerment and financial inclusion worldwide. That's where we were in 2024. Fast forward to 2025, and as of today, we expect an even more dramatic decline in 2025 of that ODA, Official Development Assistance, of somewhere around 20% with the closure of USAID and aid budget reductions in Europe. Now, at the same time, we know that finance makes such a difference in accelerating the growth of businesses, in establishing new companies with clear solutions to challenges, in establishing and growing innovative ideas. And we also know simultaneously that when women are included in finance, everyone benefits. Now, research from the IMF, the International Monetary Fund, provides empirical evidence that greater women's participation in the financial sector correlates with stronger banking stability. This is a whole literature on this very technical thing called stability and also soundness of the financial system. So we know that banks with higher levels of inclusion tend to have lower rates of non-performing loans, meaning they are more resilient, better positioned to weather economic challenges. So stack up one financial institution with all of them, and you see that if more women are participating in the financial system, if more women are getting access to capital, if more women have accounts at financial services institutions, it equals greater stability and soundness in the financial system as a whole. And that's where Women's World Banking Asset Management comes in. And Women's World Banking Asset Management, or WAM, is an investor. They're committed to advancing women in the workplace and as customers. And they do direct equity investments. And through these direct equity investments, they work to bring financial security, prosperity, and independence to women globally so that these individual women can sort of add up to global game changers. Now, our approach is to create enterprise value and deliver competitive financial returns, demonstrating that investing in women isn't just the right thing to do, it's smart, sustainable business strategy. Now, I said our because Women's World Banking Asset Management is part of Women's World Banking. We're kind of a family of institutions. And throughout my conversation today with the lead of WAM, you're going to hear how insights shape our work, how we're leveraging impact investing to drive real everyday change for women, for communities, and for the broader financial ecosystem. So let's get started with that conversation. My guest today is CJ Uhas, managing partner at Women's World Banking Asset Management, or as I mentioned before, WAM. It's a Women's World Banking subsidiary focused on gender lens private equity investing. To date, WAM has over $150 million in assets under management. Previously, CJ led Women's World Banking's Capital Markets Group, and her earlier roles included positions at Deutsche Bank and Merrill Lynch in capital markets, as well as service as an officer in the U.S. Army Military Police. Welcome, CJ. I'm so glad that you're here. I've always wanted to have you on the podcast.
Well, thank you very much, Sonia, for having me. And I'm really delighted to get into this conversation.
Well, I'd love to start with your origin story, your own superhero origin story. Can you tell me what brought you into this gender lens investing space? And along the journey, what have you learned about how capital can shape inclusion?
Thanks for that question. I would say my origin story is really Women's World Banking's origin story about getting into the gender lens investing space. In fact, Women's World Banking CEO, Mary Ellen Iskandarian, and I like to say that we were actually in the room where the term gender lens investing was coined, because we were.
What? That's amazing. Okay,
Yeah.
I need to hear more about this. This is great.
We actually it was a cocktail reception hosted by, several of the women working in financial inclusion at the time. In particular, Jackie Vanderbrug was getting ready to write her book on the topic. And I think it's either the first time the word or the term gender lens investing was mentioned, or at least was mentioned to a big group like that. And I think a lot of heads were nodding in the room. And I know for us, Mary Ellen and I were like, yes, exactly. This is exactly what we need to be doing. Because we were at the time just also starting to launch the asset management of women's, so that the division of Women's World Banking. And what was our call to action at the time, because as you mentioned, I was had already been with Women's World Banking, coming off a Wall Street career, always covering banks and financial institutions, and recognizing through microfinance that banking could actually, it wasn't just big capital flows on Wall Street, but could actually help individual entrepreneurs. So that was Women's World Banking's call to action. I had joined Women's World Banking, and I just recognized the power of a loan for an individual, and was delighted to join this organization, Women's World Banking, which in its history has always been involved, first of all, in the founding of microfinance institutions around the world, but particularly those that were founded by women, those that were particularly reaching women. And when I joined Women's World Banking, the industry, the financial inclusion industry, was at a turning point, because a lot of these institutions that had been growing since the 70s had gotten to the point where they were systemically big, and they were outgrowing the amount of grant capital basically available to them. They needed to start sourcing private capital. And to some extent, the regulators were also requiring, if they wanted to offer products like deposits, which of course they did, that they would need loss absorbing capital at the bottom of their capital stacks. And so as Women's World Banking, we were also involved in helping our network members go through this process and start to identify the right type of equity capital that they would want to bring into the fold. At the same time, were conducting research on the market overall, and we noticed that when microfinance or financial inclusion companies brought on equity investors for the first time, within 2 to 3 years, there was a 20 percentage point drop on average in the percent of women that they were reaching through their products and services. And
You're
the leader,
kidding.
yeah,
Wow.
on average, 20 percentage point drop. So it was just kind of falling off a cliff. And we weren't able to measure like statistically the changeover in the leadership, but we could see anecdotally when equity investors came on board, even though these women founders and these women management teams had brought the institutions to this stage where they were systemically important, it was like, okay, but now we're a real business. We need to bring in the suits. And so that was our call to action. We also recognized there was not a single investor out there investing in financial inclusion that had this specific mission of let's make sure that women stay part of the story. And that was why we founded Women's World Banking Asset Management. And we started to become that investor for women's financial inclusion.
And now you say gender lens investing maybe 20 times a day or more.
Yeah, it's what we do.
From coining the term to being the number one user of it. I love hearing more about your story, and particularly, I'm struck by this. I've always thought of gender lens investing as like being really kind of proactive and really kind of pushing the envelope, which it does. But I didn't know that data about like capital actually causing harm to women's participation without that gender lens, and that is really striking to me and really motivating as well.
Yeah.
Really, I'm so glad to be working with you at Women's World Banking and kind of sharing that mission. So let me ask you. I mean, you heard my intro. You know that USAID has closed, ODA has shrunk. With all of this happening, are people looking to you and other impact investors to step in and do what governments no longer can do?
So that is a really thought-provoking question, Sonia. I will start by saying that I think the role of governments and the role of the private sector are fundamentally different. And we have to proceed with caution before we can mix those two up or one can replace the other. We have to recognize that the role of government is to maximize public welfare or public well-being. And the role of investors is really to maximize return on investment for investors. And that can be both financial return, which is how it is commonly understood, but in the impact space, maximizing the impact return is equally important. So governments have broad mandates, and they have a vast array of tools and resources, including happily investment capital in recent years, but also a lot of aid capital, and then other tools such as legislation, regulation, advocacy, media, public opinion, all the important things that you do with society building. On the other hand, impact investors are much more surgical. They have a limited arsenal of tools with which they can achieve outcome, but in that way, they can also be much more directive and focused on how to achieve that impact objective. So over the past decade or so, particularly with blended finance becoming a more developed form of investing. So when governments and private investors come together with a specific aim of creating investment results and actually a return on investment, for the impact investors, it goes back to the investors that initially funded them. They're obviously looking for that return on investment. Governments have recognized that they can also have a return on investment that goes back into the coffers for the public good. So normally, again, you don't want government resources helping private sector investment, that's not necessarily the appropriate use of government resources. But if it can be recycled and if impact can be achieved, or a big role with blended finance is to crowd in investment capital that would not otherwise be brought to bear on the objectives that the government has, then that can be a good use of government capital. And the way it is often done within blended finance is it means the government is taking a increased risk exposure on the investment. So they may take a first loss position, or actually kind of guarantee returns. And the reason to do that is so that private investors who would be otherwise risk averse or afraid to put capital to work can be made more comfortable about the risk that they're taking and the fact that the return is going to be commensurate with the risk because the government or the aid capital is taking on some of that risk. In an ideal scenario, everybody wins. The government gets a return of capital and some inflation adjusted return and is able to recycle that again into public benefit. And the private investor has learned that they can achieve both impact and financial return, and will then continue to invest in the space. So unfortunately, as the government capital or the aid capital is increasingly scarce, some of these really excellent partnerships are now at risk, and these powerful tools to achieve impact through private investment is more at risk. And that is regrettable because we were really at a point of making some really exciting progress and breakthrough and new models for development in partnership. And now what often happens with good partnerships is suddenly one partner is distracted. There's stuff going on. They're not able to contribute as much to the partnership as they used to. And, unfortunately, the state of the world is such that a lot of government is facing issues of security primarily security defense in a way that we haven't had that kind of pressure on a global basis the way we're seeing it in recent years. Cooperation is kind of giving way to conflict, and that's distracting the aid partner, the government partner. I think that means that the private sector partner can't replace the role of the government, but needs to perhaps carry a little bit more weight, needs to invest more, and take on a little bit more risk than they normally would in order to keep the partnership going, in the hope that we find ourselves getting out of this era of greater conflict and greater insecurity to a time when on a global scale we can start investing again in the development of society and public benefit.
But I also hear you saying that, like, what ODA was doing, and it continues to do, is something that's different from impact investing. Like, the goal of impact investing is more narrow, and the tools you have as an impact investor are also like a little bit more targeted and specific than ODA, which I think makes a lot of sense. So even as you're stepping up, maybe, and impact investors may be taking on a little bit more risk, might be focusing on issues that ODA had been focusing on and has pulled back from, there's also not going to be a one-to-one replacement of ODA through impact funds, which I think makes a lot of sense. I want to bring up climate because that is an area where I think ODA has really pulled back from, at least in the US. We've seen that. And simultaneously, we've also seen climate vulnerability increasing. So last year, my team and I put together a report, and we found that 3 out of 4 of the unbanked women in the world live in climate vulnerable countries. And today, a year later, that figure is now 4 out of 5, which is a 5 percentage points point increase since that last report came out that we shared, which is kind of stunning because it's a 5 percentage point increase even as more women have gotten access to financial services. So, can you tell me a little bit about like your perception of that climate space, and tell me a little bit more about where finance and risk are heading against that backdrop?
Yeah, it's certainly concerning that we are facing, and particularly the women that we are trying to reach are facing ever more climate insecurity. We're definitely heading to a bigger problem, but that often means a bigger opportunity too. So if climate insecurity is now hand in hand with financial insecurity, you essentially cannot address the one problem without addressing the other. And as investors who are focused on access to finance, we're forced to think about access to environmental risk, resilience, and adaptation solutions as well. And if we don't think about that, we're all at greater risk. Our investments are at risk. And so we have to solve for that. And as your research has pointed out, Sonia, at the Women's World Banking Institute, financial institutions actually have an important role to play in offering tools for resilience and adaptation, even for mitigation, which can help the women they're trying to reach at the same time they're helping themselves. And so that's what we are really focused on now with investing in financial institutions that reach the target demographic that we're trying to reach. Recognizing as their risk to climate increases, our risk as service providers to them or as lenders to them also increases. But we have the tools at our disposal, if we're smart about it, to address those risks, benefiting the women and benefiting the financial institutions that we invest in as well. And so what I mean by that is financial institutions are reaching women where they are, right? They have that grassroots outreach to those women that we see are very vulnerable to climate risk. And they're in communication with them and can understand their needs and preferences, not just for financial products and services, but for climate risk, resilience, adaptation solutions. So I think by being very intentional, understanding the risks, the environmental risks that a financial institution faces in its operating area, and then designing tools and resources to defend against that risk is also an opportunity for financial return. It's a new product. The product is commercially viable, and now you're not only offering a loan, you're offering an insurance policy. So I think we have to see it both as a risk, but also an opportunity. And then the last thing I would say is where we're uniquely in a position to contribute to our understanding about climate risk is that we recognize that the people, the women that are most vulnerable to climate change are often left out of the conversation, the global climate dialogue. And so our approach when we work with institutions to identify new products and services that are particularly meeting women's needs and preferences, it starts with market research. Often conducted by your group, Sonia. We also know that, if we're talking to the women about their financial products, needs, and preferences, let's talk to them about their experiences with climate risks, environmental risks, what tools and resources they have available to them, and what they need. And let's bring that information not only back to the financial institution so it can start to design solutions, but let's bring that information into the global climate dialogue. So we're also bringing ideas for regulation and systemic level change, et cetera, to the conversation based on the experience of the women most affected.
And now, a word from our sponsor. EY applauds Women's World Banking's 45-year legacy empowering women through financial inclusion. Together, we have a common vision to build a better financial services industry, one that is stronger, fairer, and more sustainable. Find out more on ey.com. There's so much there, and I can see how your thoughtfulness and the experience that you're bringing to this conversation could be transformational for a financial institution. The research is the thing I'm most familiar with. Like if I go to a woman and I say, "Are you experiencing climate risk?" She will say, "No, I don't know what you're talking about." And I literally
Right.
have had these conversations with women that we've engaged with. But if you say, like, have you noticed the weather is different than it used to be? Have you noticed your season changing in length? Have you had to change your practices to account for decreasing yields or things like that? Like when you ask really interesting, smart questions, she'll have really interesting, smart answers because women are brilliant. They're brilliant farmers, they're brilliant entrepreneurs. And then being able to translate that into something that a financial institution can actually use to decrease their own risk, to provide more and better services to their customers, like that is tremendously valuable. So I'd love to turning this. I promise I have a question. Um, I you talked about like this framework for climate and gender realities and how those make a difference in terms of how you do your work. I'd love to hear kind of your vision for what that looks like on a really practical level. Like, does that mean direct conversations between you and the CEO, like advising them on certain things? Does that mean taking a climate risk approach to selecting investee institutions? Like on a day-to-day level, what does that mean in terms of how you do your work differently than others?
Thanks for that question and the lead in. This goes back to, I think, what particular tools and resources impact investors have to drive change, um, which is unique from perhaps official development assistance. What we uniquely have is, I mean, first of all, selection, right? So we have a limited number of portfolio companies, let's say, that we can invest in. And we can select those that have the greatest opportunity to reach more women, but also reach women that are vulnerable to climate change with tools and solutions. And we think that comes, like, as I mentioned, financial institutions have an important role to play. So do supply chain solutions. So those, and they're often kind of embedded, but those institutions, often in the ag space, that are connecting smallhold farmers with inputs into crops, but it can also be small retailers with inventory, and then connecting them again with global markets for their produce or their products. And these are the kind of grassroots connecting institutions that we want to invest in. Before we even make an investment, we have the tool of the investment agreements or the contractual agreements around which we invest. And we find that is a very powerful opportunity to say, here's the commitments we would require from you in terms of getting more women into your workforce, into your leadership teams, and importantly, into your client bases. And we also require at that point that these portfolio companies will accept what we're calling our technical assistance. So we also bring technical assistance that we are going to help them achieve these goals. But it obviously requires commitment on the management team to cooperate with us on that. And the other beauty of investment agreements is all the other investors have to sign up to that as well. So you end up with a shareholding group that is fairly aligned on your goals and objectives over the investment period. And then after we make the investment, this is when shareholder advocacy and board advocacy comes into play, but also our technical assistance. And where the advocacy can be really powerful is not so much just in demanding, like, you must now um, do this or that, you must hire more women. Um, Although there's a part of that too. Like, for example, if there's a opening for a senior position and we haven't interviewed a representative sample of women before we, you know, choose to hire a man, then I'm going to delay that choice. And we're going to say we're going to wait until we at least speak to 2 or 3 women candidates so we know we're getting the best talent. And, often you may end up still hiring a man, but we've had good cases too where just taking that extra step has sourced some really interesting talent that we would have.
We actually had Bushle Goslar on the podcast who told that story from the perspective of a board chair who was hired because somebody said, and it may have been you, somebody
Yeah.
said, we need more candidates to choose from. And that's how we found her. And so she shared her story as the Lula board chair on the podcast actually just a few months ago. Sorry, I interrupted you, but I thought I'd make that connection.
I love that story because also, yes, I was one perhaps on the board saying we can't select a board chair without at least talking to some women, potential candidates, and then I would have been happy to select, one of the men who had been identified. Um, and but the person who identified Buchle wasn't us, right? So it was one of the other shareholders who, by just sitting back and saying, well, hang on, she's got a point, who do I know? And suddenly, like, somebody who was so ideal for this position, like then there was no debate yet. Like when she was brought forth and everybody's kind of like light bulbs went on all over. Why didn't I think of her? And then the only thing that we were all crossing our fingers about was, would she be available and interested in taking this role? But that's exactly the kind of corporate cooperation that can happen. And if one person just says, well, hang on, have we fully vetted the talent pool here? Which we see as our role. And I sometimes say, if I'm not the person in the board meeting asking the gender question, then that is success to me. So that is definitely one of the roles on the board, or as a shareholder. But also often, if somebody is just thinking about the problem of the day, right? So the management is dealing with a lot of different things that affect their business operations. But there is almost always a gender angle or a gender question to ask, because frankly, that's half your customer base and that's half your talent pool. So every business question is going to have some implication on customers or the workforce. And I remember another time when we were really struggling with one of our portfolio companies in maintaining branch managers. They were getting poached left and right because this company was very good at developing good branch managers, and they kept losing their people. Now, because of the data collection we've done over the years, we happen to know, or we can show by the numbers, that women employees tend to be have a higher retention rate than men. And this is often surprising for leadership teams to see, because they expect women are going to be leaving more rapidly than men, because they tend to marry, they tend to have kids, they tend to have to move with their spouses. And there's a lot of reasons why women drop out of the workforce. But what that doesn't recognize is men may not be dropping out of the workforce, but they're still leaving, and they're probably going to your competitor. And they're leaving at a faster rate than women. So if you really invest in your women employees, you tend to be able to keep them longer. Now, with this particular company that was having the poaching problem, they had a very stark difference, like a very strongly different retention rate for their women employees. And I simply asked the question, how many of your branch managers are women? Because those are the ones that are leaving right now. And of course, there was dead silence, because on the one hand, the answer was not good. And on the other hand, nobody had really thought to ask that question before. But there was this recognition, wait a minute, if we promote more women into the branch manager positions, that may be one defensive tool, along with paying them more, et cetera, et cetera. But one of the reasons also, then you dig a little deeper, and one of the reasons we didn't have a lot of women in those roles is because they were requiring branch managers to move frequently and move far from home. And that was hard for women. So just by changing those parameters a little bit, and turns out they were able to do that without poor effect, and they were able to promote more women. And another, just having women's bathrooms in the branches made a big difference because, frankly, in parts of rural India, when all you have is a curtain and a hole in the ground, that's not very comfortable for women to work in that situation. So this company also did a wholesale branch upgrade and began to think about the working environment for women, and they were able to put more women into those roles. They were able to do a lot of things to address the poaching problem, and that is not a problem anymore.
That's
So
so
sorry.
practical. Yeah.
I was still moving on to like the technical assistance, because you also asked, how does this play out? And I also didn't mean to cut you off, Sonia, but if you want to ask another question or make a
I
comment
mean,
on what I was saying.
I have like 10 more questions, but we only have time for one more. But let me just respond to the things you just shared. These are such practical things, like a women's restroom, considering hiring the person who's going to stay in the position longer for the position.
Yeah.
um, kind of changing parameters, asking to see more candidates. Like this is not rocket science,
Yeah.
but these are things that seem to have really big results. And so, my question that prompted all this was basically like, how are you baking climate and gender realities into your deals? And you gave me some really, really pragmatic, easy to understand examples. So I appreciate that so much. I'd love to ask you what I call the magic wand question, but for you, it's a magic money question. um, if you had $5 million, $10 million tomorrow, like where would you deploy it? Like what part of the global system would you disrupt first?
Great question. So many great ways to use that. I'm gonna take the 10 million if you don't mind. Um, but I would say one of the problems that I'm really wrestling with right now, as an investor, and particularly an investor in a crop insurance company, and one of the real nexuses between environmental risk and women's inclusion, um, there is a market failure. So if we could invest in market failures that are really pressing right now, I would point to that the problem of insurance for smallholder farmers that are facing just increased risks, whether it's drought or rainfall or pests, of course, and diseases that are increasing with climate change as well. Um, there's a solution, of course, called crop insurance. One of our portfolio companies does this very interesting product where, rather than simply measuring rainfall index from satellite data, they're actually sending samplers, or rural people, employees, agents, to go into the fields with those smallhold farmers, and they'll sample about 10%. They'll actually harvest that smallhold crop. They'll weigh the harvest, and they will sample about 10% of what they call an agri-ecological zone, and say that that's going to face similar rainfall and weather patterns, or if there's diseases and pests. And so they'll say if 10% of the harvest on average is below a certain indicator, we will pay the whole community of farms for the difference, or we'll pay out an insurance policy. The problem is it's an expensive model, right? So the insurance costs something, but there are so many players that would benefit from having that kind of safety net. And so that means, the lenders who are lending to the farmers potentially for their purchase of seeds and fertilizers, et cetera. The supply chains that are relying on those farmers for, for food security. Um, governments as well, who need to ensure that their populations are well resourced, and finally, obviously, the farmers themselves. And so the problem is it should be affordable, with so many players having a vested interest. But because you have so many players, it complicates the problem. And what I'd really, this is an example of the kind of market failures that, with enough people coming together to address it, there's technology solutions, there's probably blockchain solutions, there's providers that would benefit from carrying some of the cost of this, but it requires a whole community to come together, and that in itself costs money. So I think I would most like to spend this hypothetical pot of money on those big hairy problems that have, we've got most of the pieces of a solution together. We just somehow have to bring it all, the partners and the players and the interests together to make it fundamentally work and be commercially viable.
And I think that example really shows how gender lens investing and climate are both part of that kind of big hairy problem. Like these are problems that are not well solved,
Right.
that kind of need a little boost in order to get there. Um, Gosh, I love. Okay, let me just reflect for a second. Um, you're a gender lens investor. I think one thing that I've seen among impact investors is like impact investors choosing like one impact to have and then really sticking with that. I love how ambitious you are as a gender lens investor in thinking about climate as an intersecting topic that informs how we think about gender. And I think that's interesting. I think that's exciting, and I think that's really brave. So, CJ, we've talked about climate, we've talked about gender and gender lens investing, we've talked about the decrease in ODA, and it would be really easy to leave this conversation a pessimist, I think. But you've also brought up these great examples of places where companies are solving problems for women and are increasing their climate resilience. So I'd love for you to just wrap us up by talking a little bit about your vision for what women's resilience might look like in the future based on their access to finance. You feel free to pull in some of the themes that we've already discussed here.
Yeah, well, if we pull all this together, and I can be, very pointed now on being an investor that's promoting not only prosperity for the women that we're trying to reach, but also environmental risk preparedness. I do think I am hopeful and optimistic that we can accomplish all of this. And um, what we would do now is, using the tools that we've developed in gender lens investing, looking at expanding it now to also increase their preparedness, or these preparedness for climate change. We would support those institutions that are reaching women with financial products or services, or access to market services. And we would help them with market research, understand what your value proposition is, not only to the women that you're currently reaching. And when I say that, I mean, if you're reaching women, by the way, you're reaching men as well. If you're the provider of choice for a woman, you're going to be the provider of choice overall. We could have another podcast about that, but this is definitely not exclusive
Let's do
of
it.
men.
2026.
So now let's find where you're not reaching women, or where your product or service could potentially be reaching more women and populations, by talking to them And as we do that market research, let's find what also would be the services, the solutions to help these populations, first of all, mitigate their climate change risk, but also be resilient to it and adapt to it. Having done the market research, let's spend the time now in product design to address the opportunities that we found. So let us develop new approaches to communities and populations we're not already reaching with products, financial products and services, or market access products and services. And let's layer on that an understanding of how we can also offer climate change resilience and adaptation products. From the woman's perspective now, she has had an opportunity to contribute her perspective to the company, and then through the company's investors like us, we're also contributing that perspective to the global climate dialogue. The company is now reaching her with access to finance, but also with those important climate resilience, adaptation, mitigation solutions. So when she faces a risk, she's much better prepared, and she has access to finance. She has access to tools and resources to help her prepare for a climate event, but then also recover from it and kind of move on, make sure that her business is protected. She's able to repay her loans. She's able to keep food on the table. She's able to keep the kids in school. And it remains a very valuable customer for the company. And then our portfolio company is receiving their return on the products they're offering. They're offering new products. They're offering it to a broader swath of the addressable market. And it just becomes a very virtuous cycle where everybody wins, including the impact investor that invested in the company in the first place.
Oh, thank you so much for not leaving me with that like threat of, destruction of the environment and decrease in ODA. Like, thanks so much for kind of bringing us back to a vision for the future that is, I think, a vision that is one that I certainly want my kids to be able to see. And I really appreciate you ending on that message of hope. Thanks for joining me, CJ.
Thank you, Sonia. It's been a pleasure.
And for everyone listening, I hope you found that conversation as interesting as I did. I know that I don't deal in the impact investing world every day. And so every time I talk with CJ, I learn more. Now, if you'd like to learn more about WHAM or about CJ's work, please feel free to open an email and shoot an email to somebody from our team. I'm not afraid to give away my email. So for this one, though, you can email Maggie Callahan. She's our asset management senior investor relations and marketing officer, and her email address is emc@womensworldbanking.org. That's emc@womensworldbanking.org. And Maggie, if you're listening, I hope your inbox is filling up. There are a couple of resources that I would point you to as well if you want to learn more about this. One is the WHAM Insight Report, and the other is the second edition of the Climate, Finance, and Gender Report that I mentioned at the beginning. And in fact, we're going to link those in the YouTube version of this podcast. So if you want to head there, you'll see those, but you can also, I'm sure, just Google it. And if you found today's discussion valuable, please don't forget to subscribe, to rate, to share it with your friends or colleagues, to leave a review on your favorite podcast platform. Somebody new reached out to me last week and said, I was listening to your podcast while I was on my run before work, and it really energized me to do my work. So I love that. We do love hearing from you, and any way you provide feedback on any of those platforms or directly to us at Women's World Banking, your feedback matters. It helps us to craft the content to bring you something that resonates. So please stay engaged, stay informed, and I look forward to seeing you next time. Thanks.